Alrighty, good morning, good morning, good morning, good morning. How are you guys doing? I hope you guys are having a fantastic week. Bitcoin is having a boring week, but we do have a few things to talk about. Important things actually in regards to Bitcoin's higher time frames and how you guys can avoid getting chopped up on the lower time frames. But before we begin, a bit of housekeeping. I just posted a brand new module 2, the Mango C program, module 14, Mango tactics and execution. My God, man, I can't believe we're at module 14 now. I was supposed to stop at module 10. I was supposed to stop at module 10. Now we're at module 14. So this module, guys, is going to be focused primarily on optimizing your performance and your gains, right? By essentially trying to juice out most of your gains and also reduce your losses, right? I'm going to be adding techniques and approaches on how you can do that. This section that I just posted over here is a very important section. Okay, it's a bit of a longer section. It's 45 minutes long. You guys know I like to break down sections, but this one is actually a combination of multiple cognitive biases all put together into one bias that encapsulates multiple biases, right? So this is a really important section. Do not miss it. Do not ignore it. I recommend you guys, because if you guys put it off for later, you may not come back to it, right? I recommend you guys, in fact, you can pause today's YouTube video and go watch this instead, because that's how important this is going to be leading into this new cycle, especially. Okay, this video, by the way, is especially more important for those of you who have market experience. You guys are intermediate traders, right? You guys are going to think that you don't need this. This is going to be very important for you guys. And if you're a new trader, well, trust me, you are going to save yourselves a lot of pain, a lot of headache, a lot of tears if you watch this module and then come back to it again later. In fact, this is one of the few sections where I would say, you know what, you can skip the other modules and watch this one first, because the Mango C program is a structured program and it's designed in a way that you are to watch everything in order, right? You should not be skipping any sections or modules. Everything relies on you understanding the preceding section. But this section over here, you can watch before watching the rest of the modules. You know what, let me just go ahead and quickly, I have it opened right over here since I just published it, so you guys should be able to see you guys can. So right over here, module 14. In fact, this should actually be module 15 because we have a module X as well, right? So module 14, Mango tactics and execution, is all the way at the bottom, but you can come down and watch this one first, okay, if you are new to the C program. That being said, okay, I think it would be best for you guys to first watch, let's scroll all the way to the top, first watch the reality of the markets and thinking like a trader. Okay, so if you're new to the C program and you just joined, watch these two modules first, in my opinion, and then you can scroll all the way down over here and you guys can watch Mango tactics and execution. Now for the rest of the program, you do want to watch everything in order. That's how it has been designed. That's one of the reasons, by the way, guys, the Ichimoku module is towards the end. The Ichimoku module is towards the end is because you do, to fully understand and fully get the most juice out of the Ichimoku module, you do need to fully understand your support and resistance, your advanced trend analysis, because Ichimoku is an amalgamation of all of that put together, right? And the risk management module is before that as well. So yeah, watch everything else in order, but this is one of the few sections that honestly you can watch it now and then come back to it later too after finishing the rest of the program and watch it again, and you're going to be like, oh man, it's even better now. But yeah, regardless of whether you are a intermediate or a new trader, I recommend prioritizing this section over here leading into the cycle. Okay, so let's begin with our market analysis. We're going to start with Bitcoin's volatility and trend profile, and over here we have the 4-hour on our first row, the 12-hour next, the daily, and the weekly. And as you guys probably deciphered, there is no long trade at the very least to be had within the mid time frames at all, right? We've been short on the 4-hour, the 12-hour, and the daily, but more importantly, the volatility has been all over the place. Looking at the chart, you guys probably know it's been very ugly. So unless you're putting on short trades on the lower to mid time frames, there is no long trade. There's no long trade. The trade, right? Ever since we closed the monthly, right? Leading into that monthly close, I talked about the good, the bad, and the ugly, right? We had the entire theme, we played the music, we had the whole shebang, right? And we were looking for the good, but we did not get the good. We didn't get the ugly either, we got the bad, right? Where we close underneath the monthly 55 EMA, we close underneath resistance. Ever since then, the market has been playing to the tune of the high time frames, the weekly as well as the monthly time frame. So that's where we're going to be focusing our attention for today's video. Now, on the daily time frame, things may start looking better, right? That's where we'll be looking for things to start looking better. The wall isn't that bad on the daily, but the 12 hours ugly, guys. And the 12 hours where we are we're using the 12 hours middle ground, right, to get ready for the daily. And for now, I'm just not liking the mid time frames at all. However, that being said, interesting things going on over here on the monthly. We did confirm 2 candles above the monthly 10 SMA now, but unfortunately, even though we got the close above the monthly 10 SMA, we did not get the close above the 55 EMA, right? This green line over here, guys, that is I'll go ahead and change colors to remain consistent right over there. This over here is the 55 EMA, right? So we were looking for this. Now, I did a live stream leading into the monthly close where I discussed the importance of the 55 EMA and how important it was for us at Mango in the 2019 bear market, right? That's the video. That's the video that started this channel where I pointed out that, hey, Bitcoin closed a monthly candle above the 55 EMA and no one's talking about it. This is really, really important, guys. And this may actually lead Bitcoin to have its next big move. And I was looking for that to happen this time as well, where we could close above the 55 EMA. But the fact that the market did not do that, the fact that we closed underneath the 55 EMA was an indication that the market is not ready to have that continuation just yet, right? So you could essentially now use the 55 EMA as your resistance right over here, right? And the 10 SMA as your support. It's as easy as that. This could indicate us actually testing around 20,500. I think that's where the 10 SMA is coming in at. Now, here's the thing. What I would like to see, guys, let's say we oscillate between the 55 EMA and the 10 SMA over the next month or two. I am going to get more bullish as long as we start seeing that trend of the 10 SMA start curling towards the upside, right? Because that slope is going to cause a sort of ascending triangle between the 55 EMA and the 10 SMA to cause the bulls to have a squeeze opportunity to the upside. That being said, if we squeeze towards the downside and break towards the downside, that's going to be ultra bearish, right? Like, if in the next month or two we start losing the 10 SMA, guys, right? If Bitcoin starts closing monthlies underneath the 10 SMA, I'll be looking back towards this region over here at around the $16,000 mark, right? So that's a given. If we close underneath the 10 SMA, that's our signal for the next move towards the downside, or rather a retest to the downside, right? So what I'm talking about here in regards to this ascending triangle squeeze is provided Bitcoin confirms the next few candles above the 10 SMA. Now, the more bullish scenario is that we can close this candle above the 55 EMA, in which case I'll be looking towards the monthly 21 EMA to get tested, which is coming in, I believe, somewhere around here, guys, right? 27,000, right? That's where the monthly 21 EMA is coming in at, right? So that's the monthly, okay? That's the monthly over here, guys. Keep it very simple. In my opinion, only watch the high time frames on Bitcoin on the monthly and the weekly, right? On the monthly, you want to watch the monthly 55 EMA and the monthly 10 SMA. And by SMA, we're referring to the simple moving average, not the smoothed moving average, guys. The simple moving average, right? To reply to one of your comments underneath Krisha's video. The 55 EMA is coming in at around 23,500, I believe. And the 10 SMA is coming in at 20,500. So $3,000 range between the two of them, right? If we can claim the 55 EMA, we are looking towards an upside of around $27,000. That's the 21 EMA if you're keeping it simple and looking at only the monthly. And if we lose the 10 SMA, we're looking towards a downside support region of around $16,000, right? Keep it as simple as that. Now, on the weekly time frame, things are a little bit more exciting because we do have our 10 SMA 21 EMA cross. We talked about the importance of this. We went through the history of this on our live stream. If you guys missed that live stream, really, really recommend watching that one. Do not miss that one. And hey, 10 SMA support here, guys. 10 SMA support. So what are we looking at? We're looking at the fact that the monthly closed green, right? We had a nice little green candle on the monthly. We closed above the 10 SMA, but we closed underneath the 55, right? So the monthly did not claim the 55, but we have a check mark here, we have a check mark here, and we have weekly support. Not bad, right? Not bad. Now, if we do lose this weekly support, it could indicate us coming down to test that monthly 10 SMA that we talked about upstairs, right? So watch for this trend to be lost on the weekly. Let's hope it holds, though. Let's hope it holds. We do have something that is confluencing with this likely holding, which is what Krisha pointed out in yesterday's video. I hope you guys watched yesterday's video. Krisha's video yesterday was so freaking good. So good. So kudos to you, Krisha, on that one. Oh, by the way, how did I forget? Krisha is having a birthday discount. It's Krisha's birthday week, so we are having a discount for Krisha's birthday. It's the coupon code, I believe, if I remember correctly, it should be Krisha _ B Day. It's either Krisha _ B Day or it is Krisha - B Day, one of the two. And so yeah, try either of them, but I'm pretty sure it is this one, right? Krisha _ B Day. So yeah, Krisha's birthday week, guys. Do not miss out if you are looking to. It's the discount on the Mango Dynamic as well as the Mango Seed. But if you guys had to choose between one of the two, the Mango Seed is the gold standard, and it's cheaper, guys. Make the right choice. Always invest in your education. Invest in yourself. Okay. The 2-day. Yeah, Krisha talked about this. So this is the 2-day from the dashboard, and she identified, or rather noticed, the bullish divergence that showed up on the dashboard right over here, right? So on the 2-day time frame, you guys can see that we do have bullish divergence that hasn't triggered just yet. But when we do trigger that, I'll be looking for a move towards the upside. But we do have bullish divergence between this point over here and this point over here. As you can see, we have an upward slope there, potential higher low. And on your RSI, we have a low over here and a low over here, right? So that is a lower low on your RSI, while we have a potential higher low on the charts. As soon as we confirm that high low on the charts by taking out the previous high over there, we are likely going to have the big move towards the upside, likely test this support region over here, putting in a potential ascending triangle, right, where we have a bull flag getting formed on the 2-day time frame. So we can essentially combine this over here with what we're seeing over here on the 2-day time frame, which is essentially bullish divergence, potential bullish divergence getting triggered while we have weekly support underneath, right? We just showed how we have the weekly 21 EMA and 10 SMA coming in like this upstairs. In fact, I can just scroll up and show it to you guys right over here. Okay, so over here, we have, change colors for effect, 2-day bull divergence. So weekly support, weekly 10 SMA coming in on 2-day bullish divergence, and hey, we are living above the monthly 10 SMA. Now the question is, does this bullish divergence fail? Because remember, this bullish divergence has not triggered yet. It's potential bullish divergence. If this bullish divergence fails, it's only going to fail, by the way, if we take out this low over here, right? We could come down a bit further and still potentially put in that bullish divergence, but it'll be very unlikely at that point. But yeah, if we take out that low over there, we're likely going to be coming down further, in which case we'll also probably lose the weekly 10 SMA, likely also come down to test that monthly 10 SMA. So that's the order of events over here, right? You can essentially scroll upwards from here now, right? Because we started this presentation with monthly into weekly into 2-day, right? Well, let's go through the bearish case. If the 2-day fails and we come down, then we're looking for the weekly to hold. If the weekly fails, then we're looking for the monthly 10 SMA to get tested. If the monthly 10 SMA is lost, well, in that case, we are looking back towards these lows over here. And hey, if that does happen, we'll talk about that when we get there. For now, though, I think the glass is half full and not half empty, right? My rules are forcing me to be more optimistic versus being pessimistic, right? And this actually goes back to the module, right? The reality of markets. So again, guys, if you are rusty and you have forgotten some of the concepts and ideas, these are really, really important concepts and ideas actually, please do not hesitate to go back and re-watch those modules. It will pay freaking dividends. So yeah, that's pretty much it for today's video, guys. I hope you guys enjoyed this one. Don't forget to make sure that you watch the most recent section uploaded. And for those of you who are not in the Mango City program, we are running a discount at the moment for Krisha's birthday. So take advantage of that one while it is still on. Until the next one, guys, do the mango way, do the easy way, do the stress-free way. Ciao.